crude is now at a 15-month low. It's already down about 15% in 2023. But what this means is it could be lower costs for a lot of the crude consumers, like paint companies. So let's find out more about that. We have Abhijit Roy, who's the Managing Director and Chief Executive Officer at Berger Paints, who joins in to give us a view on how the business is shaping up as well, given that there is an expectation of a weak monsoon. Do you think rural markets will recover? All of those questions. Abhijit, good morning. First, I just wanted to understand what proportion of your raw material prices are crude linked, and given that we've seen such a steep fall, have you seen a proportionate decline in raw material prices, and will that help you with your margins? If you could give us a ballpark number on how much that could help in FY23 itself.
Yeah, so a significant portion of our raw material prices are linked to crude and crude derivatives. So it's not necessarily just plain crude, but also the derivatives of crude like monomers, etc., which come out of crude only. So that part is dropping, but the impact will be felt much more in the first quarter of next year. This quarter also we will get some benefit, and that will come through.
So when you say benefits, you've been doing about 13-14% margins, right? Do you hope to stay in that band itself, or do you think that there are some levers, operational levers, which could help you move out of that band on the upside in FY24?
So 13-14 was an aberration, which happened in quarter 3 or just before that. It will come back to normalcy. We normally operate at around the 16 to 17% level. So that will come back. The gross margin at least had dropped down to about 33-34% from the 37-38% which we normally operate in. So that will come back to about 37-38%.
All right. Hi, Abhijit. Good morning. You told us that 37-38% gross margins are expecting in quarter 4 towards the end of this itself. So that's on course, right?
It should be, yes.
Okay. And when do you recover to margins of 16% odd from the current levels? Which quarter do you see that happening? Gross margins, high 30s, and EBITDA margins recover by when?
If it reaches 37-38, it should be around that 15.5-16% of EBITDA as well.
So that's possible in quarter 4 then?
It is possible in quarter 4, and going forward in quarter 1, it will be slightly better than that.
Okay. The other part of it is when input costs cool off, it could result in your pricing power as well becoming less, because your customers will say, hey, you're getting the benefit of lower crude prices or crude derivatives. Why don't we as well enjoy lower prices? Is that a possibility? Will you see these price increases that have been taken getting pulled back a little bit?
So as of now, it doesn't seem like that. Two reasons for it. One, these prices are always volatile. Today it has dropped, tomorrow it may again go up, some war might erupt somewhere. So the prices of crude has been fluctuating. It's come down now for the last 6-7 days. Doesn't mean that it will stay at those levels. So we have to watch and observe. The second part of it is related to the fact that we did not take the full price increases when it was happening. There's still some room left for taking price increase. We didn't want to overburden the consumer at that point of time. So there is no, therefore, need for dropping prices at this stage.
That's interesting, Mr. Roy. So are you going to take those price increases, or are you going to hold the line for now?
It depends. As of now, it is being held back, okay. But if prices start climbing a little bit, we may have to take the price increase as well.
Okay, so, that brings me to the bigger question that I have on my mind, and that is demand. Help us make sense of things, and this is something that people in the market are really beginning to notice. Obviously, you have DLF selling houses for 7 CR. Now, we don't know how much that lasts or not. There's also that budget tax factor, right, on luxury housing. So we don't know if it was aided by that move. On the other side, there are companies that are talking about consumer demand. I keep going back to a statement that Maruti made to us last week, stating that there's a bit of a hesitation in terms of new inquiries and bookings right now. So, Mr. Roy, in terms of pure demand growth, as of now, what have you seen in the 4th quarter? Post the festive season, and more importantly, given the headlines, the news flow, the inflation concerns here in India, could demand be at risk at all in the 1st quarter?
So inflation has been a concern, especially in the rural areas. There was some problem there, and that was being felt, in the 3rd quarter much more so. In 4th quarter, in the month of February, it suddenly improved, and the rural demand picked up possibly to good levels actually, and then that helped the companies to possibly grow at a faster pace. So January, February has been good months for us. Demand has been back to normal almost. March also so far looks good. So fourth quarter should be reasonably good. We should register double-digit growth rate.
Okay, so you'll reach double-digit growth in Q4, right? That compares to about a 6.5% growth in Q3. So there's an improvement. Are you also looking at double-digit growth for the full year of FY24?
Yes, Sonia, and so that looks probable as of now. Of course, time will say what happens. But quarter one, definitely, we should look forward to that, and then going forward, of course.
Okay, so when you talk about double-digit, right? I mean, are we looking at what, mid-teens, high teens? How good is demand? Because I know things are all over the place right now with the monsoon situation, which nobody knows which way it could go. But
Right.
Are you looking at, high teens, mid-teens growth for FY24?
Difficult to predict, because this El Nino thing has to be sorted out, because as of now, it looks like that, we will be in the 12 to 13% range in terms of volume growth. And that's where we are pegging as of now. But it may change, depends on how situation is. It may improve, it may deteriorate, but as of now, we are baking in a percentage growth of about 12 to 13% in terms of volume terms for next year.
12 to 13%. I think your investors would really like the sound of that compared to, the trends that we've seen in the past. Just a question. When you're talking about the revenue pie, Mr. Roy, what is the breakup between your premium segment and, let's say, the mid or entry level? And I'm just wondering if you are experiencing or if you're anticipating any down trading at all.
So it's about 25 odd percentage in the premium luxury segment, and the luxury segment, what we call it, and just below that we have a pre-lux category, which is similar to luxury. So that's about 25 to 26%, and then the economy category will be significantly more than that. As of now, no significant down trading that we are seeing. There is some marginal shift maybe in certain markets, but the premium luxury category also is doing well.
All right, thanks a lot for joining in. We will leave it at that. That is Berger Paints talking about demand picking up, and they're talking about a 12 to 13% volume growth for FY24. That's decent. After what you've seen, they're targeting double-digit growth in FY24, 12 to 14%. Well, let's slip into a quick break. On the other side, we'll get another global opinion going. Harold Vandalin of HSBC will